Hello everyone, how are you all doing out there? I'm Kate Hill, bringing you the best and unbiased and honest content on property, along with fantastic hints and tips. Today, stay tuned to hear why property price growth has slowed in 3 of Australia's capital cities. In recent months, property price growth in Australia has shown signs of deceleration, particularly in 3 capital cities, Melbourne, Hobart and Darwin. Now, this slowdown is noteworthy, especially in the context of the broader national market, which has experienced consistent price growth over the past year and longer. However, the slowing momentum in these cities reveals underlying challenges and market dynamics that are affecting property values. The Australian property market has been on a notable upward trajectory, with national home values rising again July just now, marking the 18th consecutive month of growth. So this follows a period of decline between May 22 and January 23, after which CoreLogic's National Home Value Index gained 13.5%. Despite this positive trend, there is a clear indication that momentum is leaving the cycle, with growth becoming more uneven across different regions. Melbourne's property market has been at the forefront of this slowdown, recording a 0.9% decline in values over the past 3 months. This decline is particularly significant given Melbourne's position as one of Australia's largest property markets. Several factors are contributing to this downturn. Melbourne has seen a rise in the number of homes listed for sale, with supply levels well above the average for this time of year. This influx of available properties has put downward pressure on prices as buyers have more options and can negotiate better deals. Higher interest rates and stricter lending criteria have reduced borrowing capacity for potential buyers. This has particularly impacted the higher end of the market, of course, where demand has softened, leading to slower growth in property values. Melbourne is experiencing significant affordability issues, with housing values outpacing income growth. That's not just in Melbourne, of course. As a result, many potential buyers are being priced out of the market, further dampening demand. Hobart, briefly one of Australia's hottest property markets, but only briefly, has also seen a decline in values, falling by 0.8% over the past 3 months. Now, this marks a shift from the rapid price growth that characterised the city in previous years. The slowdown in Hobart can be attributed also to several factors. After years of strong growth, the Hobart market is showing signs of saturation. The rapid price increases have reached a point where affordability has become a significant concern, limiting further growth. Similar to Melbourne, Hobart has experienced an increase in the number of homes listed for sale. So this has led to a more balanced market where buyers are no longer competing as fiercely, resulting in slower price growth. Hobart's economy, while relatively strong, is not as diversified as larger cities like Sydney, Melbourne, even Adelaide and Brisbane. As such, it's more vulnerable to economic shifts, which will impact buyer confidence and demand. And lastly, Darwin has seen the smallest decline among the 3 cities, with values really only falling by 0.3% over the past 3 months. But this decline is part of a longer-term trend of subdued property growth in Darwin. Several factors, again, contributing to this ongoing challenge. Now, Darwin has experienced slower population growth compared to the other capital cities, and this is a limited demand for housing, of course, leading to that more subdued market. Darwin's economy is heavily reliant on the resources sector, which has faced challenges in recent years. It's impacted employment, income levels, further dampening demand for property. Again, similar to Melbourne and Hobart, Darwin has seen an erosion in borrowing capacity due to those higher interest rates. But Darwin does remain one of the more affordable capital cities in Australia, which has mitigated some of those impacts of those constraints. So while Melbourne, Hobart and Darwin are all experiencing a bit of a slowdown, other cities like Perth, Adelaide and Brisbane, they continue to see robust growth. And this divergence highlights the importance of local factors in shaping property market outcomes. In Perth, Adelaide, for example, the supply of homes for sale is significantly below average, don't I know it, supporting really strong price growth. Moreover, that unit sector is now outperforming houses as well across most capitals. It's driven by stretched housing affordability, a lift in investor and first home buyer activity. This shift underscores the changing dynamics within the Australian property market, where affordability and borrowing capacity are becoming increasingly important drivers of demand. The recent slowdown in property price growth in Melbourne, Hobart and Darwin reflects a complex interplay of supply and demand factors, economic conditions and affordability challenges. While these cities face unique challenges, the broader Australian property market remains very resilient, with other regions continuing to experience strong growth. As the market adjusts to these changing conditions, it will be important for buyers and sellers and investors to stay informed and adaptable to navigate the evolving property landscape. As always, everyone, I will keep you posted on things property from around Australia as our year progresses. Getting to the end, don't forget to hit the like and subscribe button if you are enjoying all the free content. I will see you all again very soon. Bye.